As most taxpayers are aware, the Tax Cuts and Jobs Act that was enacted in the end of 2017 provided significant changes to how taxpayers calculate their taxable income. One of the most significant changes or additions to the tax code was the qualified business income deduction. And one of the critical aspects of this deduction is having a qualified trade or business. One of the biggest questions was whether or not rental activities would be considered a qualified trade or business for purposes of this deduction. The IRS recently issued Notice 2019-07, which provides a safe harbor for rentals to be considered a trade or business for purposes of this deduction. Rental activities need to keep separate books and records in order to meet this safe harbor. They need to provide over 250 hours of rental services throughout the year, which includes items such as maintaining their property, collecting rent, providing repairs and maintenance to the building, etc. And finally, they need to keep records to prove that they've met this 250-hour test. It's important to note that this safe harbor doesn't apply to self-rentals and it does not apply to triple net leases. And you may still be able to argue that your rental activity is a qualified trade or business outside of this notice if you can meet the definition within the regulations. Dermody, Burke Brown would be happy to answer any questions that you may have regarding your rental activity to determine if your rental activity will be a qualified business for purposes of this deduction.